Yo, what is going on, everyone in the XRP community? Hope you guys are having yourselves a fantastic day today as usual. Although this morning's video will not be directly XRP related, this is part of my little side series on the channel where I do leverage day trading. Crypto leverage day trading, highly risky. I do not recommend it. This is a really tough game. You are 95% chance going to lose, but 5% of traders do win and trade profitably. How to do that? I can't tell you exactly how. You just gotta fucking put in the work, take the beating, lose money trading, because when you lose money to the markets, that's called paying tuition. I've lost a lot of money attempting to day trade in cryptocurrency. But at the same time, all those losses, I have always learned something. I've always learned what not to do, what I should have done, what I could have done better. So guys, I am here with a pretty neat little day trade. I want to show you guys, currently up about 80% on the day. All right, let's go ahead and get into this. So the other day, I was about getting ready to go to sleep. I see this random cryptocurrency called SKL. On BitTrue, I go ahead and I go through this whole list right here, and I just go for, okay, what the hell is pumping super hard? Because when altcoins are pumping really hard, just like this, super vertical, okay, what's going to happen? What does crypto do? It pumps, it dumps, it never fails. It's always going to do that, okay? Unless it's a super rare moment in cryptocurrency, kind of time, right after it pumps, it's going to go ahead and it's going to shit itself. It has to. It's going to take the liquidity, right? So here's my entry, okay? Entered the position, about 5,000 of these SKL tokens on 20x leverage short. I believe I put up about $50 worth of total risk, okay? So, entered the position at 0.15948. So basically, 16 cents is where I shorted it, okay? And I believe the moment in time was after this little drawdown right here. So I do like to look at the 15-minute chart for some perspective, but I don't like to trust it too much. I am more of a 1-hour chart, 4-hour chart type of guy. So I see this, okay? I see this. It's at nighttime. I'm seeing this right here, and I'm like, okay, it's approaching, a supply zone because, again, don't love to 100% trust the 15-minute, but I do love it for perspective. You got boom, supply right there, boom, supply right there, boom, supply right there. So I'm knowing, okay, this is a zone where sellers are, likely to step in and take over. Again, not always, but supply and demand is going to work more often than break and retest. That's just a fact. So I'm looking at the 1-hour chart, okay, and it's looking like right about here as I'm going to sleep. And I'm going, okay, you know what? It approaches this supply super sharp, super strong, a little bit of wicking on both sides, a little bit of indecision, but I did not take the short right here because I'm like, you know what? That has a chance of continuing to barrel through. So before I go to sleep, I have this mindset that, okay, if I wake up and we have this kind of drawdown, okay, what I mean by the drawdown is exactly this right here. This is what I was waiting for. Because when you have these super steep movements, and then all of a sudden, for 12 to 15 hours, it does fuck all, and it just sits there and does this little dumpy consolidation, that was my signal to get in. Because yes, the buyers approached very strong right here. This is why you want to be careful shorting things that are going completely vertical, because look, that's got momentum. But if you see this kind of, drawdown where it's like, okay, you came in super strong, you reach my supply zone, and then now the sellers take over and the buyers can't do shit. That's where I went in for the sell, and then I threw in my stop loss at 17 cents. I am very liberal with my stop losses. One thing I have learned in my trading journey is if you have your stop loss way too tight, right at a previous high, the market knows that. They're going to go up, tap your stop loss, then reverse, and then go in the direction that you wanted it to go. That's the most frustrating thing in trading, is your stop loss getting hit and then the market moves in the direction you want it to go. So, okay, we had the super strong, steep pump to the resistance zone. And by the way, I'm not saying, YOLO everything on Fibonacci's, but this actually on the 4-hour, right? This was a 618 golden Fibonacci retrace. That caught my eye. I don't, 100% trust fibs, but these fucking things do work. The 618 golden retrace, I saw this thing looking like that. I'm like, okay, you know what? Might come for a second bounce, but I'm sure the 618 will reject it again. Exactly what it did. So let's get back to the 1 hour here, right? So I went ahead, I shorted SKL because I'm like, okay, got the steep movement, then the drawdown, literally just the market getting super weak, not knowing what to do, getting weak at supply, getting weak at demand. That tells me going to go for the reversal. Then the trade starts to go my way, or starts to go against me, but guess what happens? It taps the previous high, and the buyers completely get canceled. Although I was currently like $40 at a loss right here, I knew in the back of my mind, if the buyers went back up super sharp to previous high and got completely rejected, followed by bearish engulfing, I'm like, okay, this trade is 100% going to go in my favor. So then again, I'm just waiting. I'm waiting. I go to sleep, looking on YouTube for some kind of new side hustle. Saw some little cool, maybe like flipping sneakers at thrift stores or doing some retail arbitrage, just going along my day. Because that's the thing with trading. You don't want to sit here and just stare at the charts all day. You got, like, while you're, in a trade, go do other things, man. Enjoy life, try to make money other ways. And then I let it play out, let it play out, let it play out, let it play out, let it play out. And then guess what? Right here, it started going up again. An amateur trader might go, like, oh my God, it's going against me. I got to get out. No, dude, this was just simply a break and retest of that local demand. So again, I wasn't worried. Before I went to sleep, I saw this thing start to go up. I'm like, I'm not worried, dude. Break and retest local demand. And then guess what? Buyers step in again, complete rejection. Sellers step in, complete rejection. And bam, we get that major sell candle. So basically, for me, like here to here, all profit. I captured that little 4% move right there. And right now, we have a huge sell candle. Buyers step back in. Honestly, I kind of want to, wait for the buyers can't break below this half point or break above the half point and then get the 3-bar play down. But the reason why I'm going to go ahead and get out of this trade right now is because we are actually coming back to a demand zone. That's the only reason I'm going to get out. It's just because the way I run it, dude, look, it goes to supply, it gets hella weak. I look for just that sniper entry. I get in, run it back to demand, I'm out. I'm not going to sit here and be hopeful for like oh my God, it's just going to, crash super hard and it's going to go my way. No. So the thing gets to supply, gets super weak, has a drawdown, has a fake out attempt, buyers fail, run it back down to demand. Down here, I see potential for the price to start reversing. I'm going to go ahead and get out. So currently we got this trade at $27 profit right now. I know that's nothing crazy, but we just had this trading account at about $70, and in 2 days, now back up to $146. That is 70% profit in about less than 24 hours. And again, I know it's just, you could hate on me in the comments, say $27, but 70%, you're trading with some big boy money that really starts to stack up. If you could do this once a day, you got that financial freedom right around the corner. So thank you guys for seeing the video today. I would appreciate it. I'm going to go ahead and close this position at market. 71% profit, less than 24 hours. Bam. Closed, and we now have the trading account at $145. So look at that. Just 2 days ago, it was at $70. I don't document all my trades on here because sometimes it's like $8 or $11. I don't care to chart them or make a video of them. But there you go. Look at that. We were just at $70. 2 days later, it ran up to $145. All right. So trading, that's your biggest enemy. Okay. When you trade, your biggest enemy is up in here. It's yourself. All right. You are your biggest enemy. It's a fucking weird game. It's a tough game. I'm probably not even going to be a profitable trader. I just kind of like to do this as a hobby because I believe one day I could be a full-time, Chad Lamborghini Ferrari driving day trader. I believe I can do that one day, but it's gonna take a long ass time. So that's how it is, guys. You like that's really like, people try to overcomplicate trading. They try to overcomplicate trading. They try to throw on like all these indicators, all these, something cloud and the volume and the fibs and the RSI and the MACD, and they're waiting for the perfect cross. Like, dude, you don't gotta do all that shit, man. Okay? You wait for the market to get to supply, get to demand, and watch for weakness. Watch for strength. That's my strategy. I learned this from a guy named Doyle Exchange on YouTube. He's a pretty low-key Forex trader, and you guys should go check out his videos because he makes trading just fucking simple, all right? You wait for the market, get to supply, get to demand, get to points where it has previously reversed, and then look for weakness. If you see tremendous weakness, like I was seeing right here, it's like, dude, that's kind of a sign. If it gets to supply, all of a sudden the market gets super weak, buyers can't do anything, and the sellers step in, and then a fake out attempt completely rejected, that's 100% going down. So that's the strategy I'm going for. Don't overcomplicate trading. Just supply and demand. You look for weakness at supply, look for strength at supply. Look for weakness at demand, look for strength at demand. That's simple right there. Because if you can master these charts, okay, which was invented by a Japanese rice trader in the 1800s, if you can master, what is essentially just receipts, what you're looking at is receipts. If you can just master this language right here, you could make all the money that you ever dreamed of. But got to pay some tuition first and lose a bunch of trades. This is the way it goes. All right, guys, thank you for the video today. I really appreciate it. Make sure you smash the like, subscribe, check the links in the description, support the channel. See you guys in the next one.